Hello, face. Put a smile on it. Put a smile on that face. Hi, Craig Walter. Good morning. Good day. Hi, Kevin. Shalom, Kevin. Glenn, Patrick, Ziggy, Yazir, Windsor. How are you? How's everyone doing? I want to start the show with showing some of the talent that we have within our community. Okay, so here's Rudy Marin. Rudy's been trading for a while. He tweets some things in my stream, and he's got a nice little 3-drive pattern happening here in Euro NOK. You know, I never trade this pair, but I've noticed Euro Aussie looks heavy. It's already peaked, and we already know what happened to Euro CAD, so maybe Euro NOK is a decent spec here with stops over Rudy's red trend line. Everyone thank Rudy for this look in Euro NOK. And so this is the FACE community, and this is the FACE team right here. Nicola Duke and her view in crude. What's interesting about this is that Steve Alge called the low here for a bounce, and then Nick provided this to me over Skype. You know, she knows I like 3-drive patterns, and each break was the same. So her 3-drive pattern now projects, this is a freebie, up to about 50 bucks in the crude. So great call, Volgi. Great follow through from Nicola Duke on the crude oil market. So I know there's a lot of bears out there. So if you're a bear, what are you going to do? What are you going to do if you're a crude bear? Here's what I would do. I would wait for Nicola's target up there to start considering shorts. And in the meantime, look for dips to try and take advantage of it. Give me a while if you understand the analysis on that. So here's my math. FACE is 1. The FACE team is 1. So 1 plus 1, it's different mathematics here, equals 11. Because when you put two powerful forces together, it magnifies the effect. So a couple of things to consider. Off the bat, here's a couple views before I hand it off to Blake. Euro Aussie, I'd be using rallies to sell. I thought there might be one more drive to 51. That may not be the case. I'd sell rallies back towards this 940 level and reassess at new highs in case we get a third drive. We all know EuroCAD's been working. It even looks weaker. Got this impulsive move, looks like it's flagging, rallies towards 49. Could be shorted. And on both of these, I just want to give you a little bigger picture of what I think can happen. I still think that this EuroCAD is going to fill the gap, comes in under the 45 handle. Everyone with me? And I think Euro Aussie eventually is going to do the same. The gap comes in all the way down around the 43 handle. So that's, you're well, proud to be part of the community, love the enthusiasm, positivity. Well, we will, Yasser, because we've all, you know how it was rumored that Trump wanted Comey to take a loyalty pledge? It's due, Jason. So that'll give you a better opportunity maybe to short EuroCAD. But I don't think it's the beginning of a bull market. I think this is a long-term bear market. We've been pounding the table on Canada for weeks, about 300-400 pips higher. At 3.5 was the last entry. So, you know, their target's at 28, 22, and the most bearish target I've seen in Canada is 116. So, sell rallies. That's what I think there. So, similar situation in Euro Aussie. I do believe eventually we're going to fill this gap. So, those are some of my views. Just quickly, I was surprised by the strength in the S&Ps. It just blew through the 2-week off number at 233. But, you know, there's still 24 hours left. We're seven handles off the 2-week reversal. Needs to close under 24.33 by tomorrow. So it got through the 78, maybe it's 88.6. So I'm torn between whether or not there's going to be another high before we head lower, but I think this too could have been a failing rally. If you want to try it, you just get short and you have stops over this last 78.6. I learned something in the S&Ps this week, and then Nick confirmed what I was seeing. This rally was 78.6. She says the spoos love 78.6. Okay, so 78.6, we're back underneath it here. So it's a possibility that this was just to shake out people that are hip to the rhythm, the fib rhythm in S&Ps of 78.6. So we could still fail from here. Nick seems to think because the DAX is corrective, there could be another high, but you guys know my stance. And what would need to happen, and this will be my last commentary, yesterday we talked about the US dollar yen, and I asked Blake, I said, Blake, where's that major channel line come in? And he set up around 112.70. So right now we have a breakout over that trend. I'm looking for, okay, I just want to show you that chart again. So the people that like to hear the ice crack for a fade, there may be 100. There might be 100 pip scalp to the downside. Let's just take a look at the end here. So this is our traffic light page. You know how it would be hard to drive without traffic lights? Everyone would run into each other. Well, this is what I say. It's hard to trade without a traffic light page from ForexAnalytix. Okay? So I believe it was basic technical, showing the channel. Here it is. So we're there, okay? And you know my belief of trend lines destiny is that they're broken, they're poked through, you get lots of false signals through breakout. So I would really need to close over 113, 113.10 to say, and a close above it, not just intraday, to say we have a clean breakout. But there might be one intermittent break here. So just want to alert everyone to that. Starting to get a little reversal candle here. That's your 1 hour. This should be the candle. Your shorter term stuff, maybe the 15 minutes even cleaner. Here's your 15-minute chart. So potential day trade or swing trade from here. And I wouldn't look for much more than this. So maybe you risk 50 pips. And you're looking for this. So just a trade, 1170, 2-to-1 profit risk ratio. Any questions on any of my coverage so far? Because it's Blake Morrill time. How are you, Blake?
Hey, Dale. How's it going?
Good, buddy. You're what? Thank you, Tom. Go ahead, bro. How are you today?
Good. Just you know, I'm just sitting there trying to figure out what to do. I've got you know, a couple of trades going right now. What, you know, one of them is here. Let me take over the screen really quick. I'm short some euro. I don't know how comfortable I am. I mean, you know, with the here. Let me get over to the charts here.
Well, maybe that, Blake. Maybe there'll be another story from an undisclosed source.
Yeah, could be.
And you did, I remember, talk about this trend line. Is this your daily chart up here last week? So
Yeah,
we're almost there, buddy.
we're pretty much there. I mean, we hit 161% extension overnight, being here at 114. Hasn't really moved too far away from here. It's been a little lower. It's bouncing back. You know, the strength really with the euro, it comes into the euro yen. I mean, this euro yen is out of control strong. I mean, look at how bullish this is. And this was, by the way, this low that we did here on this Gartley pattern.
Yeah.
That was the week before the French elections, and this thing has been really nonstop since then. I mean, it's
Good morning, my friend.
Steve is a Super Bull.
Yeah, I said it yesterday as well. If you look at it from an Elliott wave perspective, the move up from where you have the harmonics D down there to the high is a clean 5 wave. Then we have a clean correction, and we are currently in the third wave of another move higher. That's why it's so strong, because it's a third wave actually. So it's the most impulsive move.
Three of three.
Depends. I'm not sure about the last part that you said. You know, it's 3 of 3 of 3, but it's definitely a 3 of the new move that started after finding a bottom at around 122.50 there.
What's my favorite number?
3?
777.
and it has nothing to do with my sexuality. No threesomes in my house. But 3 is my my favorite number. Oh, I know you Greek guys.
Mine too, actually, Dale.
Really? Yeah, it's a rule. It's on the doorpost, buddy. Well, so, you know, maybe Blake, with what you're seeing in euro making new highs, and really, you know, I know you don't like it, but what a great call you made in euro pound, like 15 minutes before it puked yesterday. But perhaps the euro crosses not making highs, not making new highs, possibly failing rallies, can get into gear on the downside if the strength corrects. What do you think of that?
Yeah, I mean, it's possible. I think, you know, the move that we saw in the S&P yesterday was staggering. I mean, I went from a very profitable trade 2 days ago to a small loss, and I scratched my trade yesterday, and I'm like, wow, it was unbelievable. But, you know, we're also sitting here still at the top of the channel, maybe trying to develop some sort of head and shoulder pattern, which means that we might sit in this range between 2440 to 2420 for the next, you know, month, which would completely make sense to me, you know, as we're trying to build a top here. But if the stock market starts to come off again, I think that's going to weigh a little bit on the euro yen, which in turn may weigh on the euro dollar. Now, something that suggests that may happen is if you take a look at the U.S. dollar Mexican peso, we're still in this descending wedge, and you know, we got stopped up as we hit 18 today. But you know, if this thing starts breaking like 1810, 1805, that could be a pretty big breakout of the U.S. dollar Mexican peso, which I'm still long. I still have been. I've held this position for the last couple of days. I basically own it not too far from where we're at. I own it a little lower, but basically I've been sitting in it the last couple of days because a move out of this ascending wedge might signal that maybe some more risk aversion is coming in. One of the things that
that's what you're going to write about, isn't it, in the blog, Blake? We talked about it yesterday.
Yeah, I've got some ideas about what I want to do with the emerging market currencies, Dale, that you had mentioned yesterday. It's something that, you know, I just got to figure out in my head exactly what I want to say. But you know, this is the U.S. dollar Mexican peso is one of those that I'm watching very carefully because not only am I trading it and on the long side because I know we are near support, but I'm looking for it for clues in the market. Now, one of the other things that, you know, the guys in my office, they're talking about quite a bit. Whoops. I want to take you guys over to the NASDAQ composite. And the NASDAQ, if you guys haven't seen like on a weekly or a monthly basis, let's go over to a monthly chart actually. one of the things about the NASDAQ is we're here at 127% extension, and the NASDAQ is very, obviously it's overbought, relative strength is divergent, yada, 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 right? One of the trades that, one of the like top traders in the office is basically talking about, the rest of the year being short NASDAQ, long, and you can be long like S&Ps, you can be long energy, you can be long stocks that are being beat down, but basically short high beta stocks, NASDAQ would be in that category as yields start to go up. And if you guys haven't been watching bonds, the bond market, just take you over to the 10-year. Let me get over there. The 10-year is in a huh?
It has been broken now. I mean, the wedge is broken, and I think it's very bad news for the bulls here.
Right. The bond market is breaking down, and yields are going higher. So if yields are going higher, you want to stay short, riskier assets, and the NASDAQ would qualify as riskier assets in that situation. So the reason why I'm pointing this out when you're dealing with the currency market is, one of the trades. I don't know how the yen's going to react, and this is the thing that I've been saying for the last few weeks is I don't know, because we haven't seen risk aversion. I don't know how the yen's going to respond, because if yields are rallying, is that bad for the yen? Or if stocks go down, is that good for the yen? I don't know that. I don't have an answer to that question at this point. So
seems like they've been correlating a little closer with yields, because if you look at the high in the bonds, they stopped making progress once this bounce in the yen, this advance began.
Yeah, and that's exactly right. And I think until the Bank of Japan, which, who knows when they're going to do this, but if they signal that they're, nearing the end of their quantitative easing efforts, maybe at that point in time, we see the yen start to strengthen. But that at this point, they're really the only central bank that still is in, full-on easing mode, and that doesn't look like there's any stop. And until the BOJ really signals that is their protocol, then I think we have to start looking at, even if stocks go down, does the yen go down? And maybe that means that the dollar really starts to strengthen across the board. I don't know, and I was
thinking about that too, Blake. That basically the bond rally and the stock rally happen simultaneously. Lower rates makes valuations better, and like that piece I sent from Welsh, and some people starting to get negative the bonds, thinking this rally is over. That maybe they go down together. The only sector that may really benefit would be banks, because if the yield curve stops, it's not inverted but narrowing, and it begins to, it's flat now. If it starts to turn, that may help banks. So anyway, they can both be good and bad together at the same time.
And that might actually be the case. And so for now, I think if you're trading the yen, you've got to just imagine. I mean, if you look at these yen pairs, these yen pairs are on fire. I mean, you got the dollar yen that's trying to break out. You got the euro yen that is just ripping. You got the pound yen that is just ripping. We're through a trend line. Look at this move. This all makes sense. Here's the Aussie yen taking off. Here's the New Zealand yen. Yeah. Here's the Canadian yen. These, I don't necessarily think you need to buy them now, but I was talking with a couple traders in our chat room, is if they come down, maybe this is you have to buy them, which would be unorthodox based on if stocks coming down, you buy yen pairs. That would feel not right, but that might actually be the trade. So it's hard to say. It's hard to say exactly what to do here, but I think you have to buy these things on pullbacks if we get a pullback. So now that's the question is, when are we going to get a pullback, and how are we going to get a pullback? I mean, I look at like the New Zealand yen. I mean, that thing's on fire. I mean, I guess you got to wait for it to come back down to 81, or the dollar yen. I mean, if the dollar yen continues to break out, well, maybe that's just going to be positive for the dollar all the way around. I don't know. I mean, the euro yen, it's like, wow, okay, I don't want to buy it here as we're really overbought on the daily chart, but a dip back down to 126, I'm a buyer. And I mean, with bonds breaking down, and bonds look like they're cyclically, we're turning lower, and we're this 30-year bond market rally that we've been in, or 27-year or whatever it is, maybe it really is over, and yields are going higher. And if yields are going higher globally, short yen, buy everything, and that's when the yen trade, the old carry trade, comes back into play.
Right.
And if you guys remember back in the early 2000s, that was the trade. And for those of you that weren't around at that point in time, and you're popping zits on your face, or playing video games and whatever, but that was the trade back in the 2000s. I mean, we basically, as stocks, is the market had this huge carry between the yen and everything else, because the BOJ has been in ZERP forever, NERP now, but ZERP forever. That might be the trade where you're just buying all these yen pairs and trading them, trading for that positive carry. So that dynamic might be coming back into play longer term as yields start to normalize globally. So again, I don't necessarily believe that you want to buy like the euro yen right now. Like, I'm looking at the charts. Like, you couldn't make me buy that chart right now. But buying a pullback, if we can get an aggressive pullback, because what will happen, because correlations don't change overnight, Dale, right?
Yeah.
Mm-hmm. They don't change overnight. So if the stock market comes under pressure, you're going to get yen buying. You're naturally going to get it, because people like myself or anybody else goes, okay, stock market down, buy yen. So that, I'm just using myself as an example, but people that have been thinking about it for the last 10 years, that's going to be their trade, and that's going to be the trade that they want to do. So it'll naturally pull, like the euro yen, we'd pull lower. But if globally yields are going higher, and the markets are, and the markets aren't going to implode, which I don't think they are, then you got to buy these dips in the yen pairs, and now it's just figuring out where. And like I said, I sure as hell ain't buying the euro yen here, and I don't want to buy the pound yen here, but on a nice pullback, and if I could find a good technical area to be long some of these, I probably would. Not so sure if I'd be long, the commodity yen pairs, especially if we do come under pressure, but these are just things that I'm thinking about, like longer term. Like I'm thinking about, for the next 6 months or whatever, if that makes sense to you.
How about the gold, Blake? Really didn't make much hay out of this recent break in the dollar.
Gold, well, actually, gold looks pretty ugly, and I did send out. I did send out a chart to the to our traders this morning about gold. Really just, we're attacking that 200-day moving average. These precious metals look like crap, and if the dollar really starts to, power higher, and we get a recovery rally, which, by the way, the dollar index, and this chart went out in Asia last night. You can see we're at some pretty key support. We spiked past the election night low, excuse me, in the dollar. But the dollar could get a recovery rally. If that happens, what happens to gold and silver? Do they get pummeled?
Yeah.
I mean, I would think that they do. So, you know, those are just things that you know, I'm thinking about, because like I said, gold looks like crap. It really does.
Let's
Well, remember Nick said. Remember what Nick said that.
Sorry, go ahead, Dale.
Okay, I'm just saying that Nick said, you know, we held the 200 moving average on that stop hunt, you know, where silver and gold got killed last week. And she said that she would wait for it to take out the 200 and then sell a rally back towards it. So I think we're doing that now. I think today we're taking out that 200 day.
Yeah, it's possible. Steve, what were you going to say?
Yeah. I'm sorry, Steve.
No problem, my friend. Yeah, I said that I'm seeing a bear flag in silver at the moment. Let's hope Stelios is not listening in because he might have like a heart attack or something. But I think that if we completely ignore that very strange week, I mean, this looks like a clean bear flag to me.
Yeah, it really could be here, and it does look. I mean, you look at these precious metals; they do look like they're moving. They do look like they're going to move lower.
I mean, I hate to say so, but I'm probably on a confirmation. I'm probably shorting silver, and that's going to be the first time I'm shorting it in a long time.
Okay.
You know what I call those spikes? Those spikes that happen like that, and now we're projecting back down to those levels. That was an omen tick. The market gave you a market omen that we were going to revisit that area.
Yeah, and you know what, Dale, I'd see those all the time, and whenever I see like erroneous spikes like that, I always think I think the same thing. I don't trade on them, but I always think it's very possible. Anyway, I'm going to pass it over to you guys. I got to get going for the open. Steve, good morning. Stelios, I hear him there, and Dale, have a great day as well. You guys have a wonderful trading session. And,
you do, Blake.
And I can't wait for tomorrow since it's Friday. So.
I'm with you. I'm with you, buddy.
All right. See you guys.
All right.
Okay. Bye-bye.
The king has left the building. So there you go, Steve. Now,
okay.
Now, you didn't see my Skype earlier, did you?
No, because we were working on, we were actually on a meeting for marketing with here with Velo, and then we were working on some of the broadcasting stuff, you know, to check some details, etc. So no, I didn't have time to look at it.
Because I was chatting with Stelios, and I told him to keep it a secret, but I was saying that, you know, Stelios was complimenting me on being very natural as a host. And
of course,
I said, well, I think
you
Blake
are
is better.
natural.
I said I think Blake is better, in my opinion, at least different. You know,
it's a tough competition.
It's a tough every competition. Time Blake talks, I shut up and listen. I said, but when Steve comes on, I sneak off to the bathroom and bring a newspaper. But that conflicts with my tweet that I sent out about you yesterday. Did you see it?
Oh, yes, I did. Thank you very much. I'm humbled.
Okay, so that's how I really feel. But that was just a joke. So I'll be back in a few minutes.
In a few hours. You'll be back at the top of the hour. Who do we have, by the way, who do we have today for an interview before we start seeing the chats together?
His name is Charlie Avery.
Thin. And he's going to talk to us about drugs. Yeah. No, I'm kidding.
Yeah. So I think he's a UK guy. And there's a group of traders, and I think they're, you know, pretty young guys, but they're trading for a living. Should be a good, edifying interview.
Okay, very
But,
nice.
you know, like I said yesterday, that your reviews every day give me clarity and anyone who's watching them. So go ahead.
Thank you very much. And I have to say, that we have some interesting developments today. You remember how adamant I had been plenty of times since May that keep looking lower, keep looking lower, keep looking lower for USD CAD. Yeah. But I can tell you as a fact that now we have actually reached my target. So I would be very careful here. 130 is a zone that has a confluence of supports, has given us previous lows, and I think that if there is a good area to see a pullback, that can be it. Of course, I'm not saying that you should go long, because this is like trying to catch a falling knife. What I'm telling you is that if you have been short and you've enjoyed this run, this is the point that you should consider booking some. Because risk reward being short from current levels doesn't make any sense in the short term at the moment, okay?
Yeah, and we've been talking about it from 5.5.
Yes.
And then we talked about it from 3.5.
I mean, if all charts were as clean as USD CAD, we would all be making millions, honestly. It topped at an ideal level. We had the ascending channel. It was a 127.2. It gave us a key reversal. So we had everything there. We had a possible zone that we would like to see at top. And then that's why I'm telling people, and that's why we are covering as a separate analysis, candlestick analysis. When we had a conversation on ForexAnalytix, let me take you through a small story. I mean, it's like half a minute. When we had the conversation of if we should have a separate tab called candlesticks, initially, I was for having it separately, and they were like, okay, why? We can have it in basic technical analysis. We can occasionally cover, when we have a strong candlestick, we can mention there that today we got that. But for me, candlesticks are very important because look at this. When you get a candlestick like that, that was a key reversal that day, and that key reversal gave us the top.
Right.
Right.
Yeah, it did.
Yes, it did. We never actually went above its high. Never.
No.
And then what did we have? Impulsive move down, bear flag.
Plus a false breakout over 36.
Yes, bear flag. Impulsive move down. I believe that we're going to see at the very least some kind of consolidation, if not from here, from somewhere close to here.
180.
What? Sorry?
180 to 32 is what I'm looking for.
Yeah.
It would be a great selling opportunity. 3180.
We also see today, although I'm still short from up here, I have to notice that USD NOK is also giving a very nice rebound. I mean, today's candle from being very bearish, it has already evolved to a pin bar. That doesn't change the fact that this is a very important confluence here at around 840. If you see a close below here, then you should definitely expect one more leg lower. I mean, I would say to at least 820, to at least 820. So USD NOK, you have a trigger here. If you're not involved with it yet, and you see a daily close below, let's call it 835, I think one more leg lower is in the cards, at the very least. Having to do with oil, you already mentioned it. I mean, we were very clear that you should not be short no matter what happens from this level. We're seeing a very nice rebound. We also saw an acceleration. This gives me confidence that this move higher, I don't like to be so forward-looking as Nick and Greg are, which are doing so very, very successfully and very, very often. I mean, I really admire their work. But at the very least, I've seen a strong enough pullback to expect that there is little chance that we're going to turn lower and break to new lows. I mean, at the very least, I'm now expecting something like that, at the very least.
That's in line kind of with Nick's thinking. And she called that a 3 drive where your bottom red line is.
Yes, yes. So what I'm trying to say here is if you see some kind of an oil weakness, shorting on the first weakness you're going to see, in my opinion, is going to prove a bad trade. There is a very good chance that oil remains bearish in the medium term. There is a very good chance, but shorting the first weakness you see is most likely going to be a bad trade.
That's a pearl.
So I think we more or less covered, oil related. Okay, if we want to make it more complete, let's also visit USD ruble. Obviously, we have some kind of a consolidation, perhaps triangle, but my thesis remains. This is a huge break, which people should not ignore in case they're trading it. Huge break. I remain bullish the pair in the medium term. regardless of what kind of a correction we're going to see. If it's going to be a triangular, if it's going to be an A, B, C, perhaps a retest of this intermittent line here, perhaps like here and then up. But we indicated the break higher from down here, and I think it remains a good trade. So anything oil related is now, we had a good look at it. I even talked a little bit about silver. I really think that this looks likely. I remind you, Blake didn't have it on his chart, but I do have this zone, the 1670. You remember I had said that for me this is an important zone, and today we are seeing, after only intraday breaking above it, an outside black candle. So an outside bearish candle on this zone again, in what I'm completely ignoring this week for the time being, because it was like, let's call it a firecracker. But even if I completely ignore it, this looks very much like a bear flag for me. So I don't know, probably a close below 1650 will get me interested, because the risk reward is going to be there to be short against this high, against 1690, with a target of 1580, which is this zone, perhaps even 1570, 1580. So this time I'm probably looking to be short silver once I get the trigger, which it might even happen today. I mean, we're not far away at all from it. So I mean, I couldn't be more clear with silver. In the short term, I'm anything but bullish. Having to do with gold, let's switch to it. Okay, obviously the situation is the same. Gold is not taking advantage of the dollar strength in no way. It seems to be following real yields. So the move you're seeing here, and mostly in silver as well, has to do with the move you're seeing in bonds. And I'm afraid that this dynamic will not change unless we see some risk aversion in the market, which can bring some bid to the metal despite of what yields are doing. On the other hand, technically speaking, I wouldn't want to pull the trigger as long as this ascending line holds. That is why I would rather be short silver, and if I am to be short one of the metals now, it's going to be silver. But definitely, on the other hand, you don't want to be long. You can be long if we get a test, near 1230, just because the risk reward is going to be very good, and there is a confluence of supports there. The ascending trend line, the 78.6, the 200 DMA, all of them are cluttered within $5, between 1231 and 1235, not even $5, like $3-4. So there is a risk reward to be long there, but it doesn't look like a high probability trade. I can tell you that much. So
I just want to answer one question for Walter Brown.
Sure.
The RSI at 16.19, Walter, is a sign of extreme weakness, because it tells me, especially RSI readings under 30, but especially under 20, that it's actionable. That's a confirmed low. And there could be the rally that we get, you could 90% count on a retester being taken out with that kind of downside momentum. That's a little
correct. Correct. And let me say that I've said it in a previous webinar. There are a lot of people that misinterpret the usage of RSI. RSI is a relative strength index, so in essence, it's like a lagged indicator showing us how strong or how weak something is. I'm mostly monitoring it to see divergences to help me as an extra element of a confluence of signs that perhaps I should fade something. But seeing very weak or very strong readings on an RSI, as Dale mentioned here, and we've talked about it in a previous webinar, is most of the times, especially if you're looking the longer term charts you're looking at, the more reliable it is a confirmation of which side the trend is. So, for example, you're not going to see a daily RSI hitting levels like 75, like 80 in a bear trend. That's extremely rare. Extremely rare. Seeing this kind of readings, I know that you know, from a human psychology perspective, it makes you want to short something, and it might as well pull back, you know, in the short term. But that's actually an indication that you should be looking to be long that instrument when you get a good opportunity and a good technical signal, and not the opposite. This is a conversation we also had yesterday with Euro Yen. If I remember right, Dale, my exact words is that there is no amount you can pay me to be short this instrument.
And I came up with an amount that you consider.
Yeah, and you know, my thesis remains. This is a 1, 2, 3, 3 of this leg higher. We'll see where 3 ends. So this is what's going to happen here. Okay. Of course, the levels now are random, as you understand, but this is what you should expect from here. So I'm sure I'm going to see a lot of people getting a bearish candle in Euro Yen and saying, okay, this is it. Now we have a top. But I'll tell you one thing. Then you're going to see another top as well, because, you know, most probably this is how this is going to evolve.
Maybe look at the weekly for longer term upside targets.
Sure, and we can actually do that immediately because it's here and ready.
There you go.
And all the levels are
61.8.
Yeah. So what I wrote in analysis some days ago, actually a couple of days ago, is that 129.50. I mean, a couple of days ago we were quite lower than here. I adamantly said straightforward, next target is 129.50, and I really believed it. I mean, I really believe that there is no chance we're not going to see 129.50, and I believe we're going to see higher prices than that as well. Actually,
nice.
I mean, just see the weekly, clean downtrend, break, retest, resumption. There's nothing bearish with Euro Yen at the moment. Nothing bearish. I don't know how many times I can say it.
Bamsi's saying that the Dixie hit the 1.618 extension on the 3-month candle starting Jan 2017, and has it in the demand.
Let's have a look at that.
Kind of like Blake showed that support level too in the Dixie. So he's saying 1.618 extension.
From where? Sorry.
I would say he said from the January 17 high. So it's probably wave A. The B was 1 down to here for C is 1.618 of A.
Sorry, are we talking about the DXY?
Yeah. So from the 5 high to the A low, and then to the B high. The B high to where we are now is 1.618. Yeah, down there.
Okay, let's see it.
And he also has it in the demand zone. Did you learn demand zones from Online Trading Academy? They only charge you $20K to learn that. Good deal.
This is where I have the 161.8 actually from the levels you told me.
Okay, a little lower. Okay. So
yes.
So we're approaching it anyway. Thank you, Bamsi.
Anyhow, this is a zone of interest for me. We're getting close to it. It's just above 95 actually. Okay. But you know, obviously this remains very bearish for now. I mean, DXY remains very bearish. It hasn't managed even to provide us with a higher high here. Actually, it did incrementally. You know, we had the opportunity here, the possibility of an inverted head and shoulders. We had shown it, but that's a beautiful thing with head and shoulders formation.
Yeah, Blake never wavered.
Yeah.
Even with all those DSI numbers and retail traders were too long the euro, you know, that kind of call.
I thought that the possibility of a reversal was decent, but I was really troubled by the fact that despite seeing the possibility of an inverted head and shoulders, which we never broke the neckline. So, you know, it never got triggered. It formed, but it never got triggered.
Yeah, it's a failing right shoulder. Turned into a failing right shoulder.
What actually surprised me, and that's why I was very moderate with my view on the DXY, was the following.
Yeah.
I was short the dollar at the same time against two pairs, and I hadn't a single pair that I liked at that moment to be long the dollar against. So I saw a possibility in the reversal in the DXY, but my positions were actually short the dollar. Still, I mean, the only positions I liked, Kiwi, etc., were short the dollar. So, you know, that was troubling because I was seeing some signs, but on the other hand, I still didn't have an actionable pair that told me, okay, this pair you need to be long the dollar. You know what I mean?
Because you were short the dollar with NOK and everything else, and it was working.
Yes, exactly.
While the dollar was recovering. You know, one thing I want to give Vamsy credit for. This low, if we don't really accelerate, is the first non-confirmation all the way down.
By the way, Vamsy
so
put a chart for us.
We're not confirming the Dixie low on the daily. We are on some of the shorter term stuff, but the daily, that's a non-confirmation, guys.
So you have support, you have a demand zone here, I see, Vamsy, because of, by the way, what is this? Are those quarterly candles? Do I see right? Are those quarterly candles, mate? Is it a 3 month? Probably it's a 3 month chart, right?
Yeah, he said 3.
Yes,
yeah.
okay, so it's a quarterly, okay, yes. Yes, although I have to say this is a wide zone. I mean, this is a...
I think eventually we're going to 92.
It is
that was
likely,
also
actually.
Peter Temple's target, 92. That'd be like, what, a 117 euro or something like that.
It is likely. And you know, this was... this combination of quarterly candles so far are very, very, very bearish, especially following this quarter here that was especially strong, if you see it. Okay, so we now had a look at the DXY as well. We talked about Euro Yen. There was a friend yesterday asking Stalin, I think, on Twitter about the Pound Yen. So let's have a look at it. I'm actually bullish.
Actually, I have to compliment Stalin on, you know, his namesake. What a humanitarian! What a humanitarian Joseph Stalin was. I know you're in the house here, Stalin.
We talked about this plenty of times back here. The Pound Yen was an exceptionally well-behaved technical pattern. It corrected lower. I remember we even had this conversation when Gregor was here. It corrected it in a double zigzag, ABCX, ABC. Yeah. So from an Elliott wave perspective, the correction was perfect. It found a low at the confluence of this ascending trend line and the 200 DMA. It broke the channel, it retested the channel, it accelerated higher.
So I just got a Skype message that Hitler was taking the other side of Stalin's trade here. He's fading him. Hitler's fading you, Stalin. Go ahead.
So if you ask me, we're at least going to 148 and the retest of the double top, at least. I mean, this is a 1, 2, 3, even if we start dropping from here, we should see something like that, at the very least. And those are like pessimistic targets. So at the very least, at the very, very least, I would expect something like that. But I think it's going to go higher. So this is Pound Yen for our friend Stalin. NASDAQ.
You know, Hillary Clinton made 100,000 in the cattle market back in the 80s, I think. She said that she was able to do it because she read an article in the Wall Street Journal.
Yes, I'm sure that was the case. Not.
Her broker got censored for delegating the good trades to his friends, and bad trades to people he didn't care about. But anyway, it was that's all you guys have to do. You don't have to subscribe to FA to be successful. Just order the Wall Street Journal.
Yes,
Piece
or
of
ask,
cake.
or ask Hillary.
See, I just want to show people, you know, politically, I'll take shots at all of them. Go ahead, buddy.
Oh, definitely, definitely. You know, my opinion, if you want a political opinion which is not targeted, I will tell you one thing. I know enough history to know the following thing. Of course, that's the responsibility of citizens all over the world, but the political leadership we see at all over at least the developed countries is getting weaker and worse decade by the decade. Just think of what kind of political leaders we had in the 80s.
Yeah.
Or if we even go further back, post-World War II, etc.
Yeah.
And the political leaders we're getting today, I mean, the vast majority of them are puppets. And, you know, this is...
They're also a reflection of the generation.
Exactly. That's what I said. You know,
generation. You know why? Because previous generations lived through a depression. They lived through a war. They learned to be happy with what they had. And the, you know, yuppie generation was really materialistic, and we're an untested generation. Well, just like our grandparents were tested as young people going through those two major events, now it's our turn at whatever stage you're at, I think is coming. So I don't know what, you know, 7-year cycles, you're either going to be old or young to live through something like that. So here we are.
Yeah, unfortunately, this is a big discussion we can have. But as I told you, I'm very pessimistic because, you know, the choices of people become worse and worse. And let's be honest, the political leaders that they get to choose between are getting worse and worse as a fact. I mean, I said it very, very early on in the U.S. elections. Only the fact that the binary question for U.S. voters came up between Hillary and Trump, that was already a loss. You know what I mean? That was, you know, that was already a sad outcome of what would be. I mean, I don't think that any of them winning would be, you know, a victory for U.S. people. But anyhow, that's a big conversation. So DAX has broken the ascending wedge.
Heavy.
Yes, it looks heavy, and I think that it's very, very likely if we close below here that the next target is around here, which is 12,100. So my next target is 12,100, as long as we confirm this move. So
taking a quick break, partner. I'll be back in 3-4 minutes to talk to Charlie.
Sure. Nasdaq, on the other hand, Nasdaq still looks very, very heavy. We have very likely seen an A, a B, and possibly a C at the very, very least, which, if that is the case, a minimum target is a retest of 55.84, a minimum target. To just have a simple, shallow ABC. So I'm expecting that at the very least we're going to get that. We also have a nice target at 55.47, which was this low. So I would say that you need to watch between those levels, I mean, between those 40 handles. If you see a strong response, there is a chance that that was it. Because don't forget, this is an overly bullish market, overly. And when you aim at downside targets, you need to be very nimble. I'm not telling you not to try the downside. I was short this thing. I made some good money being short of this thing on my third try. But you need to be very nimble because this market can still produce more highs before it actually implodes. So, you know, you have a zone to look for a response. If you do not see a response there, and you see an acceleration, that's going to be a very good thing. Why? Because that might indicate that something has changed. Why? Because that might indicate that this is a one 2, 3, 4, 5, for example. So this is a totally different game. But until we confirm, or unless we confirm that this move lower is going to prove an impulsive move, this second leg lower is going to actually prove the second bearish leg of a 3 bearish leg formation, so a 5 leg, a 1, 2, 3, 4, 5, you should remain very nimble. So watch at this area, repeat 54, 47, 55, and 89. If you see a strong response from there, you'd probably, be very careful. We might even see new highs. So that's it for Nasdaq. What else? Euro-Aussie. Trying to take the questions as they come. Okay, by the way, I see questions about euro crosses and pound crosses. So let me put a link on the webinar so you can see. This is the post I wrote yesterday about them. You can find it, it's free, it's on our blog post. So you can have a look at it here. I'm just posting it now. Okay, you can find it in the chat. It's a euro pound crosses reversing is the title. So you can read targets, etc. There about it, but we can still have a fast look. The Euro-Aussie, I'm still long, by the way, since last week. I think that we will at least get a test of 150.40. So I'm expecting this weakness that we saw yesterday to be temporarily short-lived, as we say. So I'm expecting this to be short-lived and probably another thrust higher. And this is Euro-Kiwi, which I at least expect for it to test 158. I remain bullish on all those crosses. I think they've given very good indications of reversals. And let's have a fast look at the pound, the equivalent pound crosses. So pound Aussie, an inverted head and shoulders in the 4-hour chart. You can even see it here on the daily. Yesterday, actually, more or less, it went close to the target, but I think it holds more upside. And pound Kiwi, it's also rebounding strongly out of a descending line, RSI divergence. I think it should at least test 181. So we had a fast look at them. You can also read the blog post. There is another friend asking what's happening with Kiwi. What's happening with Kiwi here is that might have been a 5th wave up and the key reversal that we saw. There is another possibility that this is an ascending wedge, so an ending diagonal. So this could also be something like this, right? In which case, a fresh high closer to 0.7370 would not surprise me. So 2 possibilities. We've either seen the top or we have one more thrust higher, which if we get, I'm definitely getting short. Okay, so I think it's...
Dave, can you show the yen chart 1 hour real quick before I put Charlie on? I talked about, for people that wanted to hear the ice crack US dollar yen, that it was a short up there, false breakout over the trend line. US dollar yen.
Yes, US dollar yen. I'm going to show it to you, although I need to remind you, Dale, that I wasn't remain bullish the USD yen.
I know. I said it's only a scale. And
yes. I know the trend line is this one. Yes, this one.
Okay.
Somebody might be monitoring this trend line.
If you took the suggestion, you have 20 pips, take half, and now put your stops over the high of the day. Stay with it on a lower close. The other half.
Yes, so this one.
I'm just giving some guidance if anyone did it. Okay, buddy?
Yes. Personally, a retest of 111.60, I'm probably a buyer.
Target. That's my target.
Probably I'm a buyer there.
Look for 100 pips most and go the door.
And looking for at least 115.50. So the risk reward is there. A deep down there, I'm a buyer looking for 115, 115.50. Okay?
Okay, beautiful, Steve. So there's a short-term view from today, and Steve's swing view would be to buy a break down there looking for a breakout of this channel. Maybe it's just a 2-day pause from a breakout.
Perhaps.
Anyway, it's just a little shorter-term idea, and I know a lot of people like short-term stuff too, so every once in a while I'll go to my 15-minute charts and lay it out there for you, Face, okay? You guys want me to continue to do that, right? Give me a why if you want me to continue to give you some short-term stuff. Some people aren't interested. They're mainly swing traders, but I know a lot of people day trade. Okay. All right, so I'm going to bring Charlie on now. Stick around.
Enjoy your interview, Dale.
You got ask and you shall receive, Rohin. So the community is clamoring for you, Charlie. I'm making you the presenter now, buddy. So looking forward to hearing your voice and seeing your screen. There you are.
Okay, yeah. Can you hear me, Dale?
Yeah, hi, Charlie. Very nice to meet you, buddy.
Yeah, nice to speak with you, Dale.
Yeah, I really appreciate you taking time to address Face. I just took a shot on Twitter with you. I don't know. I think I saw a tweet you put out, but I'm a big believer in building people up and lifting them up, and not just people with 50,000 Twitter followers. That doesn't it's really not a great measure of how much talent someone has by how many followers they have and how well known they are.
Small on Twitter at the moment.
So I'm guessing you're a hidden gem. I read a little bit about it. You guys have you've been trading only a year or so. So this is what I'd like to know. How did you end up being a Forex trader or any kind of trader? Who influenced you? Who do you hold responsible for you ending up in this industry?
Yeah, well, ever since I was young, from young, I heard about trading, and it's just always really been a bit interesting to me. I liked economics in secondary school, so when I was about 14, did economics, and I actually thought that economics was to do with trading back when I was, like 13, and so I did that, and I did more of that in school, maths, and did a few internships in brokers and stuff, and realised that I wanted to be the person, putting on the trades, not arranging the orders. So I just kind of got started like that. Did my degree, looked into it a bit more, and then early last year started trading, and I've been full-time since last June.
Okay.
So, yeah.
What's been your biggest drawdown since last June?
Since last year, I think 7% off the top of my head.
I mean, we all, even the best, Paul Tudor Jones, everyone has drawdowns, and I like to. When I used to raise money for people, most people would look at who was the best performer. To me, what was important was how bad does it get when someone's in a drawdown period. So, that, and how did they react to that type of pressure? There were guys on the Merck floor that clearing firms that let their pit traders trade into a deficit, and they knew what they were made out of if they could trade out of it. So why don't you tell us a little bit how your first year has been?
It really shows you a mess
and downs. Yeah, the ups and downs, and psychologically, emotionally, what it's like for you.
Yeah, so I started off with a quite a small account, like £500 or so, and just kind of tried everything, learned everything that I could, that I thought I knew. And then I was swing trading Forex on an hourly time frame, and then I started getting a bit more serious about it, put some more money on the line, and I started going into futures, specifically bond futures and some other fixed income, and basically just trade using support resistance, structural highs, lows, value areas,
So are you self-taught? Are you self-taught, or were there any books or mentors, or who influenced the methods that you use now?
Yeah, Tom Dante mentored me at the beginning. Learned mainly off him and applied some of my own stuff, kind of adapted it into my own kind of style, and just gone from there really, and grown to now, just gone a year.
Okay, so what's on?
Sorry.
So if we see your screen, I guess a picture would speak 1,000 words. So what's on your radar screen? What are you guys looking at with the dollar under a lot of pressure over the last few weeks? Do you have any charts you want to share with us today?
Yeah. Well, I was going to go through more how I do things rather than
go ahead.
Live stuff. Obviously, you guys have just covered every single base, fundamentals, technicals. So I'm just going to go through kind of how I do things and see if anyone could learn from that.
Okay.
So,
great.
This is how I start every day. This is volume profile chart, and I just kind of frame what's going to happen. I actually tweeted this picture on that day, I think, and I said something like, "There's lots of highs that unexplored. You can see we've been making lower highs." This is obviously showing each day's volume, and there's a lot of overlap. And I just thought that this day we were going to get some traction to the upside. So I framed my ideas around that, and then I'm just going to go on to a chart.
Why was that day a trigger? Can you explain that? Why was that a trigger for you to expect more upside? Because it took out that yellow line. Above 161.
Yeah, this first one. So this is the day we're in, and I just noticed that it took this one, and I thought we might get some follow-through traction to take some of these other ones. I'm not sure too high we got that day.
What's the instrument? Is this the Bund or what is it?
Yeah, this is in the Bund. Excuse my handwriting. I think this was in late May.
I write it.
Yeah.
Okay.
So we'll go into a chart of what happened that day. Switch, there we go. So this is just kind of some of the things that I look through. So looking for a break of support resistance / structure. So we have these structural highs there, and we get this big breakout. So at that point, I'm waiting for it to accept above, which is this bit. And then as it's coming back for the retest, I stuck some limits in there and there, looking to get long. Now obviously it didn't quite stretch down, which was pretty unfortunate, but that's a pretty regular occurrence in the Bund, to be honest. And then so we did explore higher.
You always enter on limit orders?
Yeah, always enter on limit orders.
Okay.
Rarely hit market unless, well, to get in I always enter on limits, but sometimes hit market.
Yeah, I don't know. I don't know. Maybe something to consider is that if you're at your platform, if you're way, I guess you have the limited orders in, but I'm kind of I'd like to not have the anxiety if it's in an area range, give or take 10 pips. I'd rather know I'm in. And
yeah, I agree.
Sometimes I think limit orders at times limit potential, but if you're in front of the screen, what's the difference if you're looking for 100 pip move if you give up 5 pips or so around your order to know you're in?
Yeah, some people do prefer to do it that way. I like to leave them there.
That's my philosophy.
Yeah, sure. I know where I'm getting in. I know where my stop is. That's the first thing that I consider is where my stop is. Was under there.
Okay. Good one.
I'm guessing price is going to gravitate higher, so I'm guessing that it's going to go to these highs once they're in. So I know that I've got quite a risk reward there. It's about 1.5 to 2R, and it is
2 to 1 risk ratio. Yeah.
Yeah, 1 times my risk to 2 times my risk.
Okay.
I think it looks about 1.7. And I have got that stronger bias. to tell me that it's going higher. And then once it does actually push up, I've then lost that. I've lost the bias. So then I'm looking for this to break. And I mark all these levels beforehand, so I'm not thinking on my feet kind of thing. And once that goes, I know I want to be short. And again, I miss it again. So maybe I should take your advice and enter a market more. But you know, these things happen. And then we get the reaction. I don't really want it anymore because it's already gone where I thought it was going to go anyway. And then I switch my bias again and try and get long, and I didn't even get a fill there. Would you believe it? Because I think about
and it went to your price. It even went to your price and didn't fill it.
Yeah. Yep. Couldn't even get a fill, and that was the end of that day. So so that was quite a disappointing day. There,
those bastards. Go ahead, say it, Charlie. Those bastards.
Yeah, I know. That was quite disappointing, but but that was on the 5-minute chart, and then I'll show you some more even shorter term material here, which is on the next slide. This is on a 1-minute chart, and you can see it's a lot more involved. This is over the period of 4 hours, and there's loads of zones and levels in there. This was actually yesterday morning. So, as we know, volatility's picked up quite a bit in the last few days. So,
yes,
it was going a bit wild.
So what is this a chart of?
This is the Bund again. I only day trade the Bund.
Okay.
Yeah.
Right.
And then so
the Bunds are one of your favorite trading markets, and they're a great scalping market, huh?
Yeah, can't go wrong.
Okay. I know when I was a young man, the Treasury bond pit at the Board of Trade was one of the heaviest traded day trading things. You know, there's nothing there now, but so interest rate futures, your preferred instrument is the bonds. Okay.
Yeah, it moves around a bit more than the US bonds. Okay. And obviously I live in London, so it's a bit more suited to my time zone.
Okay.
Because I think the US Treasuries are just a bit slow and a bit thick.
Interesting. So more volatility in bonds than T-bonds and notes.
Yeah, okay. Yeah, I think so. And
I didn't know that. So I learned from you today. Okay.
So yeah, this is this morning and yesterday. So we broke through here, and then we come and get this retest, and I actually get filled there on the low. And I was looking for a big move to up there, and I mean my stop was, I think it was 2 or 3 ticks on that, and I was looking for about 10, but then I get stopped out almost instantly. Well, a minute and a half later. And then we moved down, and we've broken through the same structure again on this candle, and I'm looking to get short right as close to my stop as possible. And I think this move was about 1 second, 15 ticks, but didn't get filled at the top. Sod's law.
Great ideas, though. Great areas. Great areas of it. Yeah. Right there. Yeah.
Yeah, on that spike. But yeah, it rose from the bottom here to up here. It was about 15 or 16 ticks in less than a second. It was ridiculous. But yeah, so I had to let that one go. Then we come back down here, no fill again. So I've had 1 loser and 2 no fills yesterday morning. It was getting quite frustrating by 8:30. But then I got this fill only just as we broke out there. I was looking for a move up really high, and I luckily got that. Same again here. I'm just targeting the lows, because when we make these kind of lows, you can't expect those to stay intact.
So what are you looking for? About 10 pips on a trade?
Yeah, about that. I think this one was like a 4-tick stop, and then that looks like about 10. So that's all I'm looking for, to be honest. Same with this one. It's mainly off of the structure, looking for a recent low or high.
Your broker should fill you more often, because you do great volume for them. So, you know, they should They should reward you for that.
My clearer. If you want some more fills. And then there was a big move down, massive move. I was actually looking for a bit of order flow around this area again, but I didn't get anything that I wanted to see, no price action that I wanted to get in off there. But then this bottom zone was a clear buy.
So you're always,
up to there,
you're always looking left for your supply-demand zones.
Yeah. I've never really considered them supply-demand zones, more support resistance, but I think it all overlaps, doesn't it?
Yeah.
I think a lot of the support resistance and structure.
So you're counting on the market's memory of an area it traded to act as a magnet and repel, get a reaction from these areas.
Yeah.
Pretty interesting, Charlie.
But
it's a young man's game to trade like this.
Yeah, I know. Well, this is up to 11:30, and there's 1, 2, 3, 4, 5, 6. There's 8 opportunities in one morning.
In a day.
Yeah. And there was a couple more in the afternoon, but it started getting a bit crazy. Mario Draghi.
It looks like about a 4-hour session you covered here, and there were 5 trades. So a trade an hour. Yeah. Okay. Nice.
Yeah, roughly about that. There was 10 trades in total on this day, and I think there's only 6.
10. Yeah. So that's 2.5 an hour. Okay.
Yeah.
Nice.
But yeah, then Mario Draghi was on the wires talking about the ECB and how the market got it wrong. So we had a straight line move. I think it was 80 ticks or something in about 10 seconds.
Yeah.
Which
How do you handle that? How do you handle that? Do you stand aside during major news events, or do you trade it?
No, I usually just stand aside, to be honest. There's no point taking that kind of risk over events like that, to be honest. The amount of slippage you can get is insane, especially when your stops are really small, and you can see how thin the book is getting and stuff like that.
Okay.
So yeah, that's just a little peek into how I trade using some of these guidelines. I mean, it's not for everyone, but I do think that doing things in this order is how you need to look at it, in my opinion.
That's your discipline right there.
Yeah,
that's your neuro-linguistic programming. Yeah.
Yeah, that's my tick box list.
Yeah, your mantra. Okay.
Yeah.
So, do you have any other slides, or would you like to tell us about your business and what you do for retail traders? Your call.
No, that's it really, to be honest, Dale. I just wanted to kind of go through what I do and try and see if I can help anyone. I don't have a service for retail traders.
Oh, okay.
Yeah, I just kind of
don't you have a trading room or anything like that?
No, not at the moment, Dale.
Okay. And who's that? Your partner on the screen with you?
Yeah,
or that's both you.
Me and him. Yeah.
Okay.
We do look like we're.
So you have 2 pictures up because you're a scalper, and one side of you is more comfortable being long, and the other side's more comfortable being short. With the jacket on.
And one's in the middle of the day, and one's at night. The 2 different directions.
Anyway, I hope you and your partner get along. I'm a Gemini. I'm a Gemini, so I have a couple of personality disorders. So, you know what, Charlie? It was refreshing, and sounds like you really have some great discipline for so early of a stage in your career, and I think you have teaching potential because your presentation was great, and you sound very humble. Stay that way, or the market will kick your teeth in. And I'm proud to now call you my trading warrior brother.
Yeah, and you, Dale.
Yeah, and I hope that pips rain down on you and your partner for the rest of your trading career. And thank you so much for joining us today and showing us a
Oh,
very
thanks for having me.
interesting. You're very welcome. You're very welcome. Charlie Avery, you could follow him. There's his Twitter handle on the screen. He has no axe to grind, and that's unusual in today's climate. So I wish you all the success, Charlie. May your path be full of prosperity and abundance. And,
Thank you very much, Dale.
and
Have a great
hang
week.
tough. And hang tough during some speed bumps, and never quit, because you don't lose till you quit. That's my advice.
Cheers, Dale.
All right, buddy. Adios. Richard Coiler in Boyd, in Port. Tell him. Okay, Greg. So thank you, everyone. That's a wrap. Thank you, Steve Volge and Blake. And you have at least 30 pips made if you shorted the yen, right? And TGIF for everyone tomorrow. I have no guests tomorrow. You're just stuck with Forex Stop Hunter, at Volge, at Pipsar, at Nick Trades, at Gregor Horvat, at Stelios, which isn't his Twitter handle because I can't remember it, and all the talent in the room. So sorry about that. Looking forward to all of you being subscribers so that when I bring up the face page, you're ahead of me on it. Get the edge, sign up for ForexAnalytix. Don't drive a car without a traffic light, and don't trade without our traffic light page. And above all, don't just count your pips, count your blessings. See everyone tomorrow to wrap up the week. Adios.